Welcome everyone to the next in our interview series as part of Empower. We have Alexeyev, Head of ESG Insight at Broadridge. We'll be exploring the broad developments around ESG over the past year. So what's changed in the ESG space in the past year?
What we're seeing is a shift towards more sophisticated ESG solutions. So a greater emphasis on sustainable investments, thematic strategies, as well as outcomes with measurable impact. Another thing that I've seen is that greenwashing has evolved from a concern to a full-blown risk that asset managers need to very carefully manage in the coming years. And finally, I would say the biggest event that we've seen in Europe over the past year is certainly the Sustainable Finance Disclosure Regulation, or SFDR.
That's interesting. Yes, there's a lot in terms of considerations for managers. So how is SFDR influencing the European fund landscape?
Well, since March, asset managers have come out and designated more than 5,700 funds as either Article 8 products, which promote ESG characteristics, or Article 9 products, which have a sustainable investment objective. And altogether, that's about 3.5 trillion euros in assets under management. And if you take products that are out of scope of SFDR, for example, UK funds, we see more than 8,000 products with over 4 trillion in assets under management across the region. So this is much bigger than most of us thought this universe was just a year ago, and much of it has to do with the impact of SFDR. Many firms are realigning their existing flagship strategies with the regulation in anticipation that fund selectors will lean on Article 8 as a minimum standard for inclusion on their distribution platforms.
Okay, that's interesting. So what are fund selectors looking for in terms of ESG capabilities or credentials?
Well, it goes beyond just Article 8 stamp of approval. They are asking very hard questions about how the asset manager is integrating ESG both across the investment decision-making function as well as in shareholder engagement. They're asking questions about organizational structure. How much are the portfolio managers involved in the process? What data sources are they using, and how do they use it to assess financial materiality? From asset managers, they're also looking for thought leadership. They're looking to see if the managers are collaborating with peers and industry associations on promoting sustainable finance. And they're also looking more for sustainable investment solutions. So if you look at across Europe, only 2% of funds are Article 9, but 12% of flows in this year have gone into these vehicles.
Okay, that's interesting. So what's selling in this space? Are there any interesting new products that are coming out?
Quite a diverse range. In terms of new products, I mean, we've seen everything from 5 billion going into a new corporate bond best-in-class strategy to almost as much, 4 billion going into a new climate transition strategy. But it's not just new funds. Many ESG strategies with a decade-long track record are also participating and getting just as much in terms of inflows. In fact, if we look at ESG flows overall, only 20% or so of it went to new products this year, and that compares with 70% 3 years ago. So there is certainly a trend towards established leaders picking up more flows from fund selection units. Climate solutions, of course, are certainly going up the agenda, and we're seeing that across the board.
Okay, and how might this topic evolve in the coming years?
Well, we see right now 7 trillion in assets under management across mutual funds, ETFs, separately managed accounts, as well as private funds that we track in our Broadridge Global Market Intelligence database. And we expect that 7 trillion to grow to about 20 to 30 trillion by the end of this decade. So fund managers will be competing for about 10 trillion in net new money. Competition will become much more intense. Firms will be continually upgrading their capabilities, and they'll be articulating how they achieve their objectives a lot better than they do now. And this will all be positive because it'll help dissipate some of the greenwashing cloud that we see hanging over the industry currently today. Overall, client perceptions are definitely evolving towards value beyond just financial performance, and ESG is at the heart of this trend.
That's really interesting. Thank you so much for that sort of high level overview in terms of how ESG is progressing over the next few years. I'm sure that we could speak about this for a lot longer. Thanks so much, Jag.
Thank you.